Hold on, something happened. Go ahead.
Hello?
Yeah.
Really?
They're watching you. Keep talking.
Hello?
What can you do?
So what is okay? Um Sorry for the technical difficulty. Anyway, new people who's watching us today, Taxfit a la carte was designed to bring a difference in the community. So the idea behind it is I remember when I was young, I believe that knowledge is powerful. Like you taking knowledge with you to the grave. What you know, people cannot take it from your head. Okay, so in my country, we do a lot of little parties, and when people sit down, people from different background talk. Well, maybe we should change microphone. Okay, so we're having microphone issue. A few of you have been commenting that my sound is on and off. So what we are going to do is we're starting the live team. We're going to switch microphone and so we can resolve that problem. I really apologize. So we're going to really soon. Don't go anywhere. Thank you.
It's this.
Can you end the live, please? End it. End it. Because then we're going to have a record of having difficulties.
No, I'm not. Listen, we can talk. You're fine.
They can hear you.
Okay.
I can hear you.
Can you guys hear me? Okay. It's kind of distracting. How we doing over there? Hi, Lavi Bohem. Okay, now guys, you can hear me. Great. I hope so. So anyway, I was saying that I wanted to bring to the table people that have something to share and that we can learn from. So today it's going to be me. We're going to talk about the tax reform. There's so many changes that have been going around, and a lot of people have reached out to me. They want to know how exactly this reform is affecting them. Okay, so you don't want to have a bad surprise the day that you're filing your taxes. You want to know. How is that reform affecting you. So it was kind of long. So I pick and choose the subject that I think is related to most people. Okay, so today we're going to go over that. But before we go over that, please, guys, today I need you to share the live, like the live, invite your friends, because I think this is very, very important what I'm about to share, and I would like to share it with as many people as possible. And also, I want to remind you how you can win your electricity bill paid. Okay? Easy, what I just said. You like the live, you like the page, you share the live, you share the page. That's it, and you comment. And today, I already know that I'm going to choose a high number, so you better comment, because if I choose a number and this is not related to no comment here, we lose. So please comment, share the live, ask your question. This is a conversation going between us, okay? So I'm here to answer all your questions. I'm not going anywhere. So before we start, you know how we like to share a positive segment. So I'm going to ask my team to right now, let's hear some positive words, and I will get back to you.
What's stopping you? Are you too tired? Didn't get enough sleep? Don't have enough energy? Don't have enough time? Is that what's stopping you right now? Don't have enough money? Is that the thing? Or is the thing that's stopping you, you?
Excuses sound best to the person that's making them up. Stop feeling sorry for yourself. Get off the pity potty. Telling everybody your sad and sob stories, trying to get people to show up to your pity potties and your pity parades. If you ever see me in a Rolls Royce, a 6 or 7 star hotel, living my life to the fullest, don't get jealous of me, because I worked my ass off to get it. Nobody handed me nothing. Wake your ass up. Awaken the beast inside. It's game on. It's go season. It's time for you to take advantage of the access and the resources that you have in your country and your community. You got a problem with your life. You got a problem with your environment. Do something about it. If you want it, go get it.
Recognize the excuses are not valid. They're conjured up, they're fabricated, they're lies. And how do you stop the lies? You stop the lies with the truth. And the truth is, you have time. You have the skill, you have the knowledge and the support and the willpower and the discipline to get it done.
The fruit of everything good in life begins with a challenge. Everything is uphill that's worthwhile. And it's not going to come to you, and it's not going to fall in your lap, and it's not going to be something that, oh my God, it just was so simple. It's always going to be difficult.
If you want it, you gotta go get it.
This is your chance. This is your shot. This is your moment. This is your time. This is your place. This is your opportunity.
This is my time. This is my moment. Tomorrow. Ain't no such thing as tomorrow. We only got today. It's your dream. If you wanted to have it, get your butt up and make it happen. If you wanted to have it, rise and grind.
You still got work to do. Stay on that basketball court. Stay on that football field. It's grind season, homie.
And we are back. Sorry. That would be funny that I die on. Okay. Anyway, I really love that motivational speech. Didn't you like it, guys? So what do you take from that? What I take from it is the fruit of everything good in life begins with a challenge. So when you see life is challenging you, don't get frustrated. Don't be afraid. It's usually because something good gonna come out of it. That's the way I see it, because there is nothing worthwhile that just come easy. So that's the way I see it. So let's dive in. Don't forget to invite your friend and share the live today. So this is going to sound like a course. I'm going to try to make it fun, but that's the only way we need to go over this, right? So the first subject that I think that we should talk about is, now we have lower tax rate and change income range. Okay, so what exactly does that mean? The tax bill retained the 7 tax bracket. So what happened is, I always get that question. What tax rate do I pay? So if you look on your screen right now, you should have a picture saying married filing joint filer. Okay, so if you're married and you're filing together with your husband, between $0 to $18,650, you are taxed 10% of your income. So that's what a tax bracket is and the tax rate. So what they did, they lower the tax rate. So you guys are going to be paying less tax on bigger amount of money. So that's a good thing. So I don't know if you can see the screen. So we're not going to go over it, but if you look, I put like the new tax bracket and what it was. For example, people that's making between 18,000 to 77,000, they used to be taxed 15%. Now they're going to be taxed 12%. And that's huge. I think that's huge and that's great. That is great news. So what about single people? Because we have a lot of single people. So you should see a screen right now about our single filers. So between 9,000 to 38,000, you're coming from, you used to be taxed 15%. Now your tax rate going to be 12%. So I think the changes in the tax code are neither good or bad, but it's making a difference, and this one is making a great difference for the more money that you're doing. So the higher tax bracket used to be charged 39% when you make more than 418,000. So now it's going to be only 37%, and they raise it for 418,000 to 500,000. So if someone make more than 500,000, you're going to be taxed like considerably less. So I'm sure our high earner are very happy. All right, so we are talking about now the second thing is tax relief for individual and family, which is pictures number 5. I tried to have some pictures help for you guys. So what tax relief that are we okay? Can you guys see me and hear me? I don't know, my team back there. Okay. Okay, guys, so we are talking what is the tax relief for individuals and family. Okay, the new tax law nearly doubled the standard deduction. So what exactly is the standard deduction? When you earn your income, okay, the government, the IRS, they have deduction. After the deduction, that's when they start taxing you. So what they did is they make the deduction bigger. Is it a good thing? Is it a bad thing? It depends how you see it. Okay. So for example, single taxpayer will see their standard deduction jump from $6,350 to $12,000. So when you were a single person that used to file your tax, if you make like $10,000, let's say, so they used to start taxing you after $6,000. So now it's going to be $12,000. So that's mean if you only made $12,000 for the year, you're not paying any taxes. Woohoo! That is awesome, isn't it? Married couple filing jointly saw an increase from $12,000 to $24,000. So anyway, if we don't want to be technical, they increase the deduction, and I think that's a good thing, because then you have a bigger part of the pie that they remove before they start taxing you, and that's going to be a huge difference. Guys, are you liking the live and sharing the live? To give your friends a chance to win the electricity bill paid today. I hope that you're doing that. If I was your friend, I would like you to share that and comment. All right, so a lot of people have been talking about the increase in the child tax credit. Yeah, this is true. They have increased the child tax credit. So what does that mean? Before, when you qualify for the child tax credit, it used to be $1,000 per child. So now it's $2,000 per child, and that's going to make a huge difference. Okay, I don't want you to confuse the earned income credit and the child tax credit. Let's say when you file and you have your kid, the credit that you use to receive for your kids is two different types of credit. You used to have the earned income credit. So let me take like a simple case. Someone that have one child, and then one child used to be worth $4,400. That $4,400 used to be the earned income credit, that is $3,400, and the child tax credit, that used to be $1,000. So for each kid, the child tax credit used to be $1,000. So now it's $2,000 per kid. So for the same child that you used to claim that was $4,400, now you're going to get $5,400. I don't know if you understand what I mean. So this is a very good, because if someone have 3 children, you're going to have an increase of $3,000 from whatever you used to make. Okay. For family with children, the child tax credit is double from $1,000 to $2,000. In addition, the amount that is refundable grows from $1,100 to $1,400. Guys, I apologize that that's a lot of numbers, but this is taxes, talking about numbers. If you have questions, ask me. This is the time to talk about the question. So what I decided to do, to not bore you like you're in class, while we're going over the tax reform, I will in between talk to you about life situation that we encounter here at Taxfit. That's mean things that we saw client go through. So maybe you can keep this in the back of your head, and that can help you if you see that happen. So one thing that happened, I'm going to take one of those examples. One client 7 years ago, it looks like the IRS issued a refund twice, and they sent her a paper check. Okay, she don't even remember if she deposited the check, but I also know about another person that happened before. So the IRS can make mistakes, so it's their mistake. They sent 2 checks, and now they're penalizing her. After 7 years, she received a very nasty letter saying that we made a mistake. We issued 2 different checks, and now you owe us $5,000. So this is to tell you that the IRS have the time to go back how many years that they want to, and to come after you. So that's why that's very important that you have qualified, knowledgeable people doing your taxes. Doing your taxes alone doesn't protect you. Like, oh, I didn't know, I did it online. The IRS really don't care about that, and they have time 7 years after that to come after you. So that was a real life situation that I wanted to share with you, because that client was like 7 years, and it's their mistake. They don't care. She still owe $5,000. So the next point on the tax reform, elimination or reduction of deduction. Okay, this one, I would not say that is bad or good, but it makes a difference. What happened is, because they make the standard deduction. You remember when I was telling you that now if you make $12,000, they're not going to tax you, etc., etc. So they decided that they're taking away your personal deduction, because before, the way they used to calculate the amount they're going to tax you, they used to take out the deduction, and they used to take out some value for you. So now that goes away, because they said, I'm giving you upfront a big portion that you take out from your income before you tax. So we're taking away the personal deduction, unfortunately. So that's how it goes. Mortgage interest. Okay. So guys, today we are together to talk about tax reform, because a lot of people have reached out to me and they wanted to know what exactly have changed in the tax code and how it affect them. So today it's a conversation where you can ask me your questions. I want you to like the live, share the live, and at the end of the live we're going to pay somebody's electricity bill. It's going to be a conversation about the changes and also real life situation that happened to real client, so you can be on the lookout if that ever happened to you. Okay, so we were talking about state and local taxes, and we're going to be talking about home mortgage interest. So that's a huge one. The bill limit the amount of state and local property income and sales tax that can be deducted to $10,000. In the past, these taxes have generally been fully tax deductible. So what does that mean? That means that you can only deduct up to $10,000 of your state or local property taxes. Ouch! Well, because I know those $1 million property, that the tax are very high. So before you used to be able to just deduct that, but now they limited, they cap it at $10,000. That is really a huge one. So what happened to your home mortgage interest? The home mortgage interest deduction can only be taken now on mortgage debt up to $750,000. Okay, that's down from 1 million. So before, you used to be able to deduct in your taxes the interest that you pay on mortgages that you have for up to 1 million. So now they reduce that. They're only going to take the interest that you pay on $750,000. So hopefully a lot of people don't have a mortgage as high, so you don't have to worry about it, right? And that's only concerning people that took a mortgage after December 2017. Everybody before that, if you already had your mention, you're good to go. So to go back to real life situation, something that we have seen that happened a lot this year, missing 1099 unreporting income. So what happened is we would have client who 2-3 years ago was maybe work a part-time job somewhere that they were not taking taxes on them, and they never receive any paperwork that's saying that they were supposed to report that in the tax. And after a couple of years, the IRS is coming after you, because if the person that employed you at that time, they did report to the IRS that you had the 1099, so the IRS will come after you. So I saw that happen a lot this year. So you want to watch out for that. If you know that you had a part-time job, that the person was paying you cash. As a matter of fact, every time that you will take a new job, you want to ask your employer, are you going to give me a W-2 or a 1099 at the end for the tax? You want to know. You want to take a mental note. You are responsible to know what to report on your taxes, because the IRS don't care about oopsie doopsie, okay? So it is your responsibility to make sure that you report all your income. So that has been an issue for this year. A lot of people have been audited for that. And sometimes it's very easy to fix, because we have helped a lot of people. It's just like you need to make an amendment. We put back the income, and most of the time that income that you have had a lot of expenses related to it, and bada bing, bada boom, you do not owe anything. But some people, they are afraid when you receive that letter. They let the IRS tax them. So you want to really consult a professional. And here we are expert about small businesses and unreported 1099. So reach out. You can make an appointment at taxfitrefund.com, okay? We are open all year long. So now we're going to talk about charitable contribution deduction. So what you give to charity, what you give to your church, okay? It's almost the same, but with two notable changes. First, taxpayer can deduct donation as much as 60% of their income from 50% that it was capped last year. So what does that mean exactly? That means you can donate 60% of your income to church. Well, the people that really love to just donate, because before you were limited to only give 50% of your income. Now you can go up to 60. There's people that just love charity and love to work to just like help other people, and I commend them. So they made that higher for you. Guys, how you doing? I know that this is like a class situation, so I hope that I can keep you entertained and connected. Please like the live, share the live. It's because I know this information, this conversation that we're having today is so important. I want to reach how many people as possible. So please share it. Let me see if I have some of your questions. Please don't forget to ask me your questions. All right. The next one that I think it was interesting to talk about is medical expenses. All right. So the threshold for the medical expenses deduction has been reduced from 10% of adjusted gross income to 7.5% of adjusted gross income. In other words, if your adjusted gross income is 50,000, you can now deduct unreimbursed medical expenses for up to 3,750. Okay, so that's great, because what used to happen before is after you take the deduction, you could only deduct unreimbursed medical expenses 10% of that. So now they make it less, 7.5%. This is actually good for people that have like big medical expenses. I know people that give birth and they have to pay everything, or they were not insured and they went to some trauma and they have to pay that hospital bill. So that's good news, because they used to say that you can only deduct what you pay after 10% of your income. So now it's only 7.5%. So that's amazing. I'm happy about that. So what is a tax break for parents? I love my parents. I have to tell you, they work so hard. They deserve all the break that they can get. Okay, as we mentioned earlier, the personal exemption is going away, which could disproportionately affect larger family. So to put this in perspective for you is, let's say you used to be a family of 5, like 2 parents and 3 children. You used to compute a personal exemption for each of those family, but now they took that away. They just give one exemption. So people that have large family, they are kind of at a disadvantage, because the deduction that they used to have when you combine everybody is going to be larger than what they give you today. So what they say is, however, this loss and more should be made up by the expanded child tax credit. Why I come back to this is because that is such good news. So you can get up to $2,000 per child. So if your children are 17 or older, or you take care of your elderly relative, you can claim a non-refundable $500 credit subject to the same income threshold. Furthermore, the Child and Dependent Care Credit, which allows parents to deduct qualified child care expenses, have been kept in place. Yes, they were trying to eliminate the child care expenses. Let me tell you, they don't even allow you to take out as much, because I know people that pay like $10,000 every year in child care expenses, and they were trying to take that away. But luckily, they were not able to do that. So you still can deduct your child dependent care, expenses. Yes, anybody that just tuned in, please do not forget to share the live. So let's share something that happened this year. So something else that happened. People that have small businesses and that receive payment from PayPal. This is what happened. I know that PayPal have a huge amount before they report a 1099 to the IRS, but they do report a 1099. So you need to know what is the amount of money that you receive from PayPal as a business that's going to result in them reporting what they call the 1099K. Furthermore, they will not send you anything in the mail. So you are responsible to go to your account and then see if they gave you 1099K. So that's a real life situation that happened to a client here. She didn't know, like 2 years ago, she made $48,000 from PayPal because she has a little business at home where she does hair. And she had a very nasty letter from the IRS saying, hey, PayPal told us that you made $48,000. We want our 20% from that. Thankfully, she came here and I was able to help her. So we did an amendment, we reported the income, and we were able to put her expenses. So that's real life situation. So now let's talk about education tax break. Okay, earlier version of the tax bill called for reducing or eliminating some education tax break, but the final version does not. Thank God. So yes, they were trying to take away education tax break. Those people were trying to take away everything. I am so happy. So specifically the lifetime learning credit, when you have degree higher than the 4 years of college, so you can still deduct a little bit more less, but for your education expenses. Student loan interest deduction are still in place, and the exclusion for graduate school tuition waivers survive as well. Okay, so that is very good news. I'm very happy about that. So far, it was not bad. So now let's take one that's very bad. This is the thing. They said that if upfront I'm giving you a big deduction in your income, in your taxable income. So what they're going to do, they're going to remove a bunch of expenses that you used to claim before. Okay, so there's people that do unreimbursed work expenses a lot. Like majority of the taxpayers does that. And it's bye-bye. So there's a list of them, and I'm going to tell you some of them, the most current. Casualty and theft loss. So you used to be able to deduct on your Schedule A if someone come to your house and they stole things and you have a claim and you lost something. No more, unless it is a disaster, like if a hurricane, something that is federally declared disaster. So if you've been vandalized, it's your business alone. Moving expenses, that's a big one. You used to have a big cut because you move. So now they took that away. You can no longer deduct moving expenses. So forget about that. Really? Can they hear you? When I say moving expenses is when you were moving from one state to another. There's a certain amount of miles that you have to be moving from your old job to your new job, and you used to be able to deduct your miles, hotel stay, the U-Haul, so many things that most of the time add up to $5,000 minimum. Like I have a lot of clients who did moving expenses, and I always see that it's between $3,000 to $5,000 at least to move. And unfortunately, you're not going to be able to take advantage of that anymore. Okay. You can no longer deduct your parking and transportation. So, what you pay for your tax preparation expenses. Ouch. Yes, I have to say it. It's in there. So basically what they're trying to say is itemizing won't be worthwhile anymore for millions of households. While we're on the topic of deduction, many of these may now be a mouth point even to taxpayers who have been using them for years. Even though most major deductions are being kept in place, the higher standard deduction will make itemizing not worthwhile. So I want to give an example because that's the way my mind functions. When I read something, I want a picture to understand it. So for example, let's say that a married couple pays $8,000 in mortgage interest, and they make $4,000 in charitable contribution and pay $5,000 in state and local tax. That add up to $70,000 in deduction, right? which when compared with the previous $13,000 standard deduction, look like a smart idea. However, now that they allow you to deduct $24,000 if you are a married couple, so you can no longer itemize. Okay, so for some people it would be good, but people that used to have thousands in dollars in unreimbursed work expenses, they are going to lose that advantage. All right. How are you holding up so far? I hope I'm not boring you. Okay, I didn't see any question. Do you guys have any questions? Hello, team. Does anybody have any questions?
I just moved from one office to the other.
My partner, he said that he just moved from an office to the other. Can you deduct that? You are out of luck, my friend. All right, still talking about 1099. Sorry that I keep coming. I have so many examples of this because it's a mess. From Uber and Lyft, I know a lot of you by now, you know that a lot of time Uber and Lyft do not mail you anything. You have the responsibility to go into your Uber and Lyft account and find that 1099K. I don't know, different year they do different things. For example, one year Uber didn't give a 1099, they just gave a list of expenses and your reported income. Anyway, what I'm trying to stress here is it is your responsibility to know exactly what you need to report as income on your taxes, because sometimes different entity, different habits. Okay, so you need the other thing that I wanted to talk about that has been a huge issue is the identity PIN. This is what happened with the identity PIN. The IRS have randomly chosen a bunch of people to give a PIN. If you don't have that PIN, you will not be able to file your taxes. There is two things I want to say about the identity PIN. First of all, if you change address, you need to tell the IRS that you change address. I'm not talking about the post office, because what happened with that identity PIN letter, they give special instruction to the post office to not forward that letter anywhere. So if you change address, even though you do a following address with the post office, when that letter, that identity PIN letter reach the post office, if they see that you have another address, they will send it back to the IRS. The IRS even have certain letters that they instruct the post office to just burn it, which after that you cannot e-file your taxes. It's a big hoopla. So if you know that you change addresses, the IRS does have a form that you need to tell them that you change addresses, especially if you're receiving an identity PIN. So you want to have that in place so you're not delayed in your taxes. Usually they send that PIN the first week of January. So if you see the second week of January, you do know you receive a PIN the prior years, because if you receive prior year, every year they're going to send you one. So if you see by the second week of January you didn't get it, you want to know what happened. Okay, so that was identity PIN. We had a lot of clients with identity PIN issue. So another change in our tax code, I know a lot of people are going to be happy about that, is the Obamacare penalty. Guys, this penalty is going away. You know how they used to tax you, give you a penalty because you didn't have health insurance. So this penalty is going away. So if you don't have insurance, you will not be penalized. But there is something that I really want to stress about, okay? This is talking about tax of 2018. So if you haven't not filed yet your tax for 2017, you still might be penalized for that. But that's great, because a lot of people, they just didn't qualify for health insurance, and then they just agree to pay the penalty instead of having health insurance. Well, someone over there that was deciding the tax code win. So that's a great relief, because that penalty used to be pretty stiff. Guys, are you liking the live, sharing the live? Go. I give you 2 seconds. like it, share it, invite your friends. Let's have a conversation about the tax reform. I hope that so far you're learning a few stuff. I am available to answer your question, or if you don't have question right now, or you have a question that's not part of the subjects that we discuss, you can always reach me at taxfitrefund.com. It's very easy. You go there, you make an appointment, even though it's for a phone call. So you make an appointment and I call you back. We are open all year long, and we love answering questions. Okay, I don't care that I didn't do your taxes. You have questions, you're welcome. I will answer them. So with that said, let's talk about our self-employed contractors, freelancers, sole proprietors, Mary Kay consultant, Avon consultant. All right. So the bill has a myriad of changes for business. The biggest includes a reduction in the top corporate rate to 21%, a new 20% deduction for income from certain type of pass-through entities like partnership, S corp, LLC, sole proprietor, limit on expenses of interest from borrowing, almost doubling of the amount small business can expense. Okay, so in simpler words, small businesses, you're going to be able to expense more. Okay, so that's all you have to know by that. By the way, while I'm on the subject, I want to reach out to the people that have those type of business, like that's doing Mary Kay, that's doing Herbalife. All the time I have people, when they come and I do their taxes, they're like, oh, I didn't see that I did a lot of money in Herbalife. I only sold one product, so I didn't think I need to report that because I only made $200. Okay, fine, you only made $200. But what you don't know is having that type of small business qualify you for some expenses. So sometimes it is really in your advantage to report that business, and a lot of people that's doing the type of business and not taking advantage of that because they're afraid. They think that on the little income that they did from that business, they're going to be automatically taxed on it, but that's not true, because the first year or two of those type of business, truly talking, is you have a loss instead of a profit. So you want to ask advice, and that's why here at Taxfit, I have a culture of a quote. I love when client calls me in advance, or when you come to do your taxes, is not only filing papers here. I see what you have, and let's say if the year that you come, I cannot help you maximize your refund, I advise you how to strategize everything to maximize your refund. So that's the culture that we have here. Okay, so it looks like you guys have a couple of questions. I'm ready for some questions.
How many children can a family have?
3. No, let me refer that. You can claim as many children that you have, but they're only going to give you tax credit or whatever credit that has to do with children for 3. So before, they used to add up the personal exemption, right? So since that went away, so it doesn't matter now that you have 8 children. But if you have 8 children, you're welcome to put them on your taxes. You can. Yes? I hope I answer your questions. Guys, are you commenting? I hope so. All right, so this is really, we're coming to the end of the subject that I think that was most important. So what did we talk about? There is no personal tax exemption anymore. Your home mortgage interest, they're gonna reduce the mortgage that you have to be able to take advantage of your interest. There's no more tax penalty for healthcare. They kept the education credit. They give you a higher deduction on your taxes. I think that the best way is you maybe want to call me and let's talk about your situation, because something that we do here at Taxfit, we do a free review of your 3 previous year of tax. So reach out to taxfitrefund.com. That's taxfitrefund.com, and that is so easy to make an appointment with me. Let's review the previous tax years if I didn't do it, and let's see where exactly you are at the minute. So
John Herbie is asking if I'm in New York, can you file my tax?
oh yes, actually we have a huge community in New York. Yes, I can file taxes all over the United States. It doesn't matter in which state you are. We are able to help you to file your taxes. And I want to stress out, guys, that here at TaxFit is a free quote. That's mean, let's say you try to do your taxes yourself in TurboTax, okay? And you want to come ask me question and you want me to see what can I do for you. If I don't get any advantage and you get the same number, you are not committed to do your taxes here. I'm happy to do that because I think for real it should be like I bring an advantage to you. So do not be afraid if you have been doing your taxes yourself. You just want to try me out. You want to have a conversation with me to see what can I do, or what deduction that you're not thinking about, that you didn't know that you qualified for. You're more than welcome to go to taxfitrefund.com and reach out.
Lavi Bohem, you had posted that nurses and police officers were going to get some deduction. What kind of deduction were you talking about?
Well, what I was talking about is those type of career, they used to deduct what they call the unreimbursed work expenses. And as you see that I said, they are going away. So they are part of that list of unreimbursed expenses they used to deduct, and they're not going to be able to deduct it anymore. Thank you so much, Fabienne, for telling me that's very informative. I was really a little bit scared of doing that live because I'm like, oh my God, it's going to be like a class. But I think we survived. We keep it interesting. So now I'm going to choose the electricity bill winner. So guys, can you please comment one last time? Everybody comment right now. TaxFit. Share the live one last time. After that we finish the live, we always keep it up. So maybe someone that's now at work will have the opportunity to see it. Okay? Drum roll, please. Oh my goodness. Oh, by the way, before that we choose the electricity bill winner, another real life situation that I see happening a lot. People that are taking student loans, okay? Like that go from, you need to be careful because the people at the financial aid, the financial aid, oh my God. I don't care if you guys are watching. They really messed up people sometimes. So what you want to know is, first of all, whatever is in your taxes need to match what you're going to put on that application. So I know there is certain time people that are married are not filing jointly because there's some times where we qualify that you don't file jointly. You want to make sure on that application you don't put married in the financial aid, because what happened, they think that they are tax expert. I don't know why. Okay, so they come back and they said you have to correct your taxes. There's a couple that just came the other day, and those people advised them to go back 2 years and file married filing separate because they didn't file together. And I don't know if you know that married filing separate is the worst status that you can file. Okay, so those poor people, they were filing married filing separate and they end up owing the IRS. Now we're going to have to correct it again. So if you're taking financial aid, the first thing you want to make sure, I don't care what is your present situation, your taxes, put on that application whatever is on your taxes, okay? And if, unfortunately, you didn't understand and you put some mixed information and they ask to see the tax and they start saying that you need to correct the tax, do not listen anything they have to say. consult an expert. You need an expert. They are not tax expert, and this is more than 1,000 times that I saw that they make taxpayer correct their tax the wrong way, that result them owing the IRS, because they're not here to advise you really on tax issues. They are here to match that application with the tax that they have. That's all that they care about. So you want to make sure to always consult an expert that's going to be your interest. Take a couple of consultation. I don't care. A lot of people give free consultation. I give free consultation. So before you jump and, put a noose around your neck, you need to know exactly what are your rights. So guys, this is the end. And we are going to choose who's going to win the electricity bill. I hope you commented enough. So I chose number 137, which is Mr. Team Leader in the back.
Yeah, Celeste.
Indira.
Oh, Gael Celeste. Gael Celeste, unfortunately, doesn't live here. You have to be living in the United States. I wish I could pay the electricity bill in Haiti, but not yet. So we're going to go to the next. I'm sorry, Gael. So let's go to the person before 136.
Calivielo.
She just won, no?
Calivielo just won.
135. Huh?
John.
John?
No one.
John LB. He was asking when was going to be the next live station. Well, congratulations, John. You are the electricity bill paid. Taxfit is going to pay your electricity bill today. You need to inbox us your last electricity bill, a picture of it or whatever. And then you need to give me your phone number associated with that bill. It needs to be on your name and the last 4 of your social security. And to answer your question, the live show is every other Tuesday. So every other Tuesday, twice a month, Taxfit pays someone electricity bill. We're here even during the busy tax season. Thank you so much, guys, to have been here with us today. And our next live should be very interesting and very, how could I say that? I'm going to let you know. Keep following the page. We will soon, in a couple of days, tell you who we're going to interview in our next live. Okay? Thank you so much. Enjoy the rest of your night. And if you need to reach out, go to taxfitrefund.com, make an appointment. I can review your taxes. Make an appointment. Let's talk about it. Okay? Bye.